I'd like to call to order the 5 p.m. 8/28/24 URA meeting. Please join me in the Pledge of Allegiance. We are. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Roll call, Rebecca, please. Chair Preeden.
Chair Preeden.
I'm here.
Board Member Blum.
No.
Member Ross.
Here.
Member Cobb.
Here.
Agency Manager Wheeler.
All right. Do we have any visitor communication for our URA meeting?
None.
Okay. All right, on to a consent agenda.
Move to approve the consent agenda.
Second. We have a motion and a second. All those in favor say aye. Aye.
Aye.
Aye. All right. We're on to agency business, discussion and consideration of resolution URA 2024-04. Looks like Jordan.
Yep. Thank you very much.
Awesome.
Let's see. I'll see what I can do here without sharing my screen. But it doesn't hurt to probably put the agenda up there. As was approved through your council goals discussed in the budget, the URA has a multitude of projects coming up in this fiscal year, about $1.5 million worth. And with that, we just want to be cognizant of the existing fund balance in the urban renewal agency in order to do those projects, because at this point, we don't have that $1.5 million of total fund balance. So with that, staff strategized a way to at least fund those projects in the near term. One option was to do kind of longer term financing, which we've done in the past. One of the thoughts there was we were concerned about not only the cost of doing that financing, but also just the interest rate and the timeline we would be committed to. So another option was to do a kind of more creative line of credit, which would solve our problem to do these projects in the near term. So we pursued that line of credit with a couple different banks and ended up with the bank that we hold our treasury account with, which is US Bank. And so that's kind of the foundation of the genesis actually of creating the line of credit. Now comes the funky relationship with the urban renewal agency in the city. So when we went out and got our bond counsel, they kind of told us about some of the nuances of URAs in cities and lenders. And surprise, lenders are a little bit reluctant to loan URAs money just because of the kind of the little bit more volatility in the tax increment financing that an urban renewal agency has versus a city's permanent rate. So with that, you have to do the URA can get the lending, but they have to do it with the full faith and credit of the city. So almost like the city's co-signing, more or less. And so with that, that's why we have both of these intergovernmental agreements with the URA and the city and these resolutions. So you're going to hear the same song and dance in the next meeting. And so the resolution before you basically allows and authorizes the city and the URA to enter into this intergovernmental agreement to pursue this lending. So the IGA and the resolution are fairly straightforward. Again, a little bit of a background on the credit line. We settled on $2 million. That will more than be enough to pay for these projects. And we also settled on 2 years. The 2 years, and that'll give us kind of 2 tax cycles. So if we did 1.5 years, we probably wouldn't. We only get 1 tax cycle worth of property tax increment. So that was kind of the theory there. It can be extended, it can be modified to an extent, and obviously we don't have to use it all if we don't need to. So I think that's kind of the long and short of the dynamics between the city, the URA, and then the resolution and the IGA.
Sounds good. My first question is, can you remind us the projects that we don't have the money for that we're planning on using these for?
Yeah, so in reality, you have the West Side Pump Station, which is about $400,000 commitment by the URA. You have the Roundabout Art, which is $425,000, and then you have the the workforce housing grant of about $400,000.
Okay.
I believe those are the right amounts. or excuse me, West Side Pump Station of 500,000.
Yeah, so that's the bulk of it, right?
So that's the bulk of it. Yep, yep. And it all comes, I mean, the timing of these is it's somewhat uncertain. You know, we have them budgeted, but you know, due to construction and, you know, things that just we can't predict right now, we're not sure. So, you know, the extra credit line just gives us a little bit of flexibility to do some of these projects whenever we want to. And if an opportunity comes up to do one of the things that's in the urban renewal plan, we can also do it at that time as well. So it's a nice tool to have
Yeah.
for sure.
I say, let's borrow more. No, I'm just kidding. No, I really like this and I appreciate you summarizing it. I think this is very responsible, a responsible way to go. And thanks for looking at it in many different ways. Does anybody have any questions?
What does a line of credit cost compared to others financing options?
Good question. So, the line of credit, number one, it has a lower initial cost. So if you were to go to a long-term borrowing, it would probably be about double what we're going to pay here in the 58,000 up front. And then you have, the interest rates at just a little over 5.5%. And so that's a little bit probably more favorable than long-term borrowing right now as well. And then we're not paying it if we're not using it. So that's the other advantage of it. If we were to go get, you know, long-term financing, that we'd be paying on that interest regardless right away. And then lastly, another interesting thing that I actually learned through this process is there's an unused amount that you have to contribute. So if you don't use your line of credit, you actually pay 35 basis points toward the unused portion, which if we didn't touch the $2 million would be about $7,000 a year, which would still be cheaper than long-term financing.
They get you coming and going, don't they?
Yeah, that
Use
was,
it or not use it or, you know.
yeah, that was kind of a shocker there for sure.
Just for public edification, if the city decides to pay it off early,
Yeah,
there's no extra fee for that or anything like that.
right. Yep. Good question. There's no prepayment penalty or anything like that. Yep. And we'll try to do that. I think, obviously try to keep the debt down and pay it as much as we can.
We get about almost $500,000 in tax increment per year.
Yeah.
So, you know, if you could do the math, if we
Yeah,
did
it'll work
take
out.
out the full 2 million and we put all the tax increment towards that debt financing, because that's what you have to do with urban renewal agencies is debt finance projects. It's only a few years until we can pay off that debt if we exercise it.
Yep.
So in essence, this is a HELOC for the city.
Basically.
Yeah.
Well, yeah, I guess we're drawing from the equity in our renewal area.
Yeah. And oddly enough, so our strong financial position as a city and the annual financial report that we do on an annual basis did help our rating. So if you don't have a good enough rating, then your basis points go up, not only for your overnight rate or the regular rate that you're paying on the money, but also the unused rate. So, I mean, it's not a lot, but I mean, it's a savings.
Well, yeah, and when you have credit, you got to use some of it. Otherwise, your credit rating actually goes down if you just don't do much.
Yeah.
Which is weird about credit. You'd think it'd be more responsible, but you get a better credit rating, but it's actually kind of opposite if you're not
Right.
using some of it.
Right.
Doesn't make sense. Okay. Any other questions?
I would move to approve resolution 2024-04.
URA. I think we,
URA resolution? Okay.
I think we have to say that. Second.
All right, we have a motion and a second. All those in favor say aye.
Aye.
Aye. That was all of us. Okay. Anything else you want to talk about since we're here? Okay, we're going to adjourn the URA and we'll get going at 5:30. We got 20 minutes to play with.